Well, yes, the vaccine was extremely hopeful, and so we had hope overcome fear, which is a good thing. But both emotions are equally strong, and hope can turn to fear quickly, and that's what it looked like was going to happen as we started the day on Tuesday. We have two very strong human emotions at play here in the market: hope and fear, and some greed. Throw that into the mix as well. So we've got all three going on. And of course, the markets are the markets and price is price, but human emotion is definitely a driver. So when we had the vaccine news out on Monday, hope overcame fear, and we saw the market take off, and particularly the Russell 2000, which is what we've been talking about, that rotation into small caps. However, what happened was it could not take out the high that it made a week ago Monday, which was over 78. It got close, or I should say 178. It got close, but not quite. So when the market opened up this morning, fear came into it because we weren't gapping higher. And that's really basically how edgy everybody is right here, because the vaccine is encouraging, but we still have issues. So what happens is people start getting nervous, they start selling, and then the selling dries up, the buyers re-enter, because overall the market is performing well because it doesn't seem to care about anything negative that you're hearing in the news right now, only focusing on what's going to happen in the first quarter, where they see a recovery, even if it's what they call a K-shaped recovery. They're seeing more stimulus coming in February, and the vaccine news looking more and more promising as companies like Pfizer and Moderna come out with more promising results. So there you go. Basically, you have to live under a rock right now and just follow the price. Well, I think it's a combination. First of all, in terms of the cruise ships and the airlines, they got hammered pretty badly. So really, if the bad news is already in the market and it's done with, and we can only look for a better future, then buying them when they're beaten up is probably not the worst idea. There are going to be plenty of people, though, who aren't going to be buying at these levels, like me, for example. I'm not necessarily a person who suffers from fear of missing out. Rather, I don't necessarily need to race to be the first one in to try to find a bottom, rather than looking for the confirmation of the bottom. So if we relay that to what's going on with COVID, that means that really we have to see, not only that the vaccine can be distributed, that it will be used, and then in the timely the timely way it can be distributed. And then secondly, on top of that, we have to see just how far this COVID goes. Like here in the United States, if we just take my hometown of Santa Fe, we've had tremendous surges. New Mexico has shut down. But the hospitals are not quite at full capacity yet. And the death rate's gone up, but not at anything alarming. And that's what the market is going to keep measuring here. So since I'm a trader, first and foremost, I like to look at the macroeconomics, but I like to use the timing of a trader. If we look at, let's say, the cruise ship, if we look at the Norwegian cruise ship line, and we just look at the chart, what's interesting about the chart right now is that it's basing, but it's coming into resistance at a 50-week moving average. I like the 50-week moving average as a barometer because literally it measures almost a full year, right? 52 weeks in a year. And so if we can get through those levels, then I think that maybe we're onto something. And that's when I would be more inclined to start thinking, yeah, the worst is really over, and let's take a look at the opportunity there. And of course, use a good risk and reward parameter at that point. Well, my suggestion is, first of all, let's take a look at these high-tech stocks. Even though they are underperforming, say, the value stocks or the small-cap stocks, they're still doing pretty darn well. Amazon just came out with news today that they were going to start a pharmaceutical portion of Amazon Prime, which means you can basically get a doctor to write in a prescription and then in 2 days have your prescription delivered to you. I think when you're looking at something like Google, it's still doing very, very well. Netflix is sort of hanging in there. The social media stocks are sort of teetering. But overall, if you look at NASDAQ, it held exactly where it needed to. So even though the small caps could continue to go up, that doesn't mean that NASDAQ could necessarily go down. It just may not go up at the same velocity as the small caps on the basis of an improved economy. So we actually did buy NASDAQ last week. We bought the Qs at around 290 and we're sitting long with that. And as I always like to tell everybody, as long as you know where you're wrong and when you know when to start taking some profit, if you are that inexperienced and you have no clue and you just basically throw a dart and buy and hope for the best, no, that's not such a good strategy. I'd say really good time to learn from somebody like us at MarketGauge, who have been doing this for 40 years and really understand pretty much every market condition.